Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. Earlier in January, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find it. In this, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence I created here on this daily chart is the bright red 2009 to 2016 bullish shift pitchfork, and the specific key piece is the bright red upper time, which is currently at 13,357. That sits just above the top of the market and which has capped the 3 significant thrusts higher we have seen in January. Indeed, this is the key piece of overhead resistance and only piece of overhead resistance seen here since the break up and out of the recent showrunner for this market in mid-December last year, and that's the July 2022 to January 2023 shallowy bullish shift pitchfork. This break higher originates and follows on from the head and shoulders continuation pattern seen between late September to late November 2025. So this leaves us with the question, what now? Well, there are at this time 2 possibilities, and we should see a result by mid-February, as well as the likelihood of some false breaks as well. The first possibility was to look at the whole 2026 action so far as a possible double top. This week, that pattern has been, at the very least, been amended to a not fully formed triple top pattern. This very much depends if prices can get down to the 12,515 zone and then break below it. So far, that seems unlikely. The second possibility involves the previously mentioned bright red upper time plus the newly drawn bright green late November 2025 to date uptrend, currently at 12,988. Together, they may be forming a possible ascending triangle. I grant you, neither trend line is perfect, especially the bright green uptrend, but the opportunity for such a pattern exists, and it deserves close attention. The advantage of this pattern compared to the triple top is that it has the chance to be both bullish and bearish, whereas the triple top is a solely bearish pattern. In all this, please be aware of the high chance of false breaks in either direction. There is a third possibility, that is to look at the whole action since mid-December last year as a possible bullish halfway hesitation, which would be a huge pattern if it came about. We've not gone down that route, not yet. LME 3-month aluminium. The markets break higher in early January, up and out of the dark blue late September to mid-November 2025 bullish shift pitchfork, was coincidental, by the way, I do not think it was an accidental coincidence, was coincidental at the same time as a move up and out of the more longer term bright red December 23 to July 24 bullish shift pitchfork. My reasoning for this is that if you were going to break higher, then it was best to smash 2 patterns when they were close together, despite the additional resistance they may have, to better ensure a move higher. The dark blue upper time, which is currently at 31.34, crossed over the shallower bright red upper time, currently at 30.71 on Christmas Eve, and the market punched higher soon thereafter on the 5th of January. Now, as I said last week, and I quote, there is a possibility the market may now move along the top of one or other of these upper times, and it seems to wish to do that with the now broken dark blue upper time, and that is something to watch out for. End of quote. Well, this leads to the possibility of another, larger pattern that may be in the offing. This is not a very defined pattern. I don't think it has the required number of touches beside it yet, but we may have an April 25 to date, very large, rising, expanding wedge pattern, which is outlined in bright green on my daily chart, and that's currently 28.70 to 32.91. We are still within this pattern, and I suggest this is also one to watch. Finally, one other feature to watch for, and that became evident to me on my longer term charts when I compiled the annual video commentary. You can find this on the ADM ISI YouTube channel in January. It is a very large November 2015 to April 2020 bullish Andrews pitchfork, which I have transposed onto this daily chart, and I highlighted it in purple. The nearest is the purple middle tine above, currently at 33.93, just under the top of my daily chart. This is not a target level, but a likely resistance, as it sits close to the July 2008 high at 33.80. To test this, we would need stabilization over the dark blue upper tine, and following the bright green trend line lower, I'm not sure whether the market can do such a thing as yet. LME 3-month lead. The recent key pattern here had been the original rectangle pattern that developed into the quite shallow early August to mid-October 2025 bull channel, which was breached on both sides in October last year and in late November as well. And as I said 7 weeks ago, enough that I no longer think of that pattern as being, no longer think this pattern is viable as a rectangle, end of quote. The recent break lower halted in mid-December last year at the 38.2% Fibonacci line for the whole of the 2025 move at 1939, forming a 3-day bullish morning star pattern and moving higher up to test the high of 2025 late 2 weeks ago, and it failed. I suspect this failure was due mainly to the nearby 50% Fibonacci line of the May 24 to April 25 move at 2098. Indeed, I think this caused the high in November last year, as well as the early January high this year. Now, since then, we have pulled back lower down towards the first of the decent moving averages. That's the green flatlining short medium moving average, which is currently at 2016. We've reached it last week, but we've not as yet pushed down enough to close below it. Not yet, but we're not far away. Thus, whilst we can say the range of the market has been extended somewhat following the dog days of August through to October last year, we cannot say anything other than that. There is no real trend here. Just look at the major moving averages. They are still closely packed together. This brings me to my final point. It's a point I've been making here since the start of 2025, and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December 2024, we saw that 2024 had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since. Indeed, prices are less than $85 higher than at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is it a strong countermeasure to it. Hence, I still say, even now, with prices higher than at the end of 2024 by $80 odd, one should still look at all things going forward, in this coming year and beyond, in this metal, in the shadow of this longer term bearish pattern.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.